So how do you see Europe playing out? Do you see, just more of the same for the next few months, or do you think we're that close to the edge of the cliff that something dramatic could happen within the next week or two?
Unfortunately, I'm personally positioned and have my subscribers positioned for the idea that could be a sudden banking collapse, by which I mean PNB Paribas or some bank is suddenly revealed to be insolvent, and we have what we almost had in 2008. Mervyn King came out a year after 2008 and said, "Whew, we were within hours of a complete banking wipeout." And by a banking wipeout, what happens is one big player goes insolvent, which means nobody knows who they can trade with anymore, and so you have to institute capital controls, or you in some way have to shut the system down. And remember, I talked about how interlinked all the systems are. The way I translate that is I think that there'll have to be some cooling off period. Not unlike what Argentina went through for a 2-week period when they had to shut their banking system down to prevent the flow of capital out of the banking system, to figure out where the chips were let all the chips fall and figure out where they lay before they could open the banking system back up. Cash controls were put on. Individuals were not allowed to take out more than a certain amount of cash on a daily basis. And so these are not unthinkable outcomes to me.
Yeah, to a certain extent, we're already seeing that. There's an article in the Wall Street Journal, I think just a week or so ago, talking about the London interbank offering rate, the LIBOR rate. And they were saying, is it really LIBOR or LIE-BOR? A LIBOR rate, meaning that it wasn't really reflecting the true interest rate. And the conclusion of the article was that a lot of banks weren't borrowing at the LIBOR rate anymore. The windows were closed. And I'd actually seen this before, back in the 1973, 1974, when the Japanese banks back then had a tough time after the oil shock. A lot of them had made a lot of loans and they were close to insolvency. And they were borrowing in the interbank rate, or at the LIBOR rate, but at what was called the Japanese premium, which was significantly above the LIBOR rate. And we have the same thing happening now with the European banks, who are trying to borrow at LIBOR but really can't get money at that preferential rate because the banks are unwilling to actually lend, to take the risk of lending to some of their colleague banks because they know they're walking dead.
And the LIBOR, of course, is heavily influenced by the central banks who wanted to manage it down because they know it's a crisis indicator, so they like to keep it low. So it's another manipulated or influenced, whatever word you prefer, measure of money. And so the true cost of money actually is higher. So if you and I are banks, we're not going to trade at that rate because that's not the true cost. We're going to trade at a much higher rate. And so this distorting effect where treasuries no longer, the information that we used to get from the treasury market, like the 30 years trading at 3% or whatever, that used to give us some information, but does 3% reflect the 30-year risk of the United States and with inflation, with counterparty risk? All that? No, absolutely not. And so what we have today in Europe and the United States and Japan is that money itself has been mispriced, and when you have mispriced money, everything's mispriced.
Yeah.
Risk is mispriced, where our money flows, and it encourages speculation. And so what I see happening in Europe is that there's a sudden sort of cessation of that speculative fever and we get back to basics. Fundamentals will matter again, real analysis will matter, and when you really analyze the situation, you say, there's too much debt here. This credit bubble, which is not just 10 years in the making, honestly, it was a 40-year-long credit bubble.
Yeah.
It's breaking. We're going to have to write down an extraordinary amount of that debt, and that's going to be a hard process. The biggest misallocation you mentioned before, which is that prudent people who have access to all this free capital look across a landscape and they decide there's easier returns or better returns to be made by speculating with it. We're going to lever it up, we're going to enter the shadow banking system, we're all going to trade with each other in this giant casino, which is so disconnected from fundamentals that you can have things like incredibly smart people missing the idea that the subprime crisis, which was one area where they were, I think, misallocating badly and playing, but they were playing in this casino where they couldn't even see that loaning money to a hairdresser in Las Vegas so she could buy 19 homes was a bad idea. And that bad idea, like all bad ideas, was probably going to come to a bad end. And so somehow the subprime crisis, which was so completely obviously a bad idea, is just one example of where instead of fundamentally analyzing, say, I don't want to be part of a game that's doing that, we see that kind of same speculation happening across whole other spheres that still have not yet blown up and people haven't looked at them, but the same misallocation is happening. And when you make bad investment decisions, losses are the most likely result.
Do you see European leaders turning to gold for solutions, going on some kind of a gold standard at maybe 10,000 euros an ounce?
I would certainly hope so, because it really, the key lesson out of this is that If you have unrestrained money systems, which basically fall prey to political decisions, not fundamental decisions, I think what you get is exactly where we are. You end up with huge imbalances that the political pressure, which I understand, to preserve the status quo, it's very strong. But what you end up with is just a larger bubble as you attempt to preserve it, not a smaller one. Instead of taking 2 steps down the step ladder, we go up another 2 steps, and when we fall, we're falling from a greater height. So I think ultimately, if we're going to make the prudent decision here, we're going to say, listen, allowing credit bubbles to grow unrestrained, allowing ourselves to get to positions where a fall is actually a fatal fall rather than just sort of a painful fall, that's a bad idea. Instead, what we want to do is have this some sort of a system that will allow us to take steps down that step ladder before we get too high. And the only system we know about that does that automatically is a gold standard. There might be other ones, and maybe we could scheme up other ones, and I'm sure they have some on the drawing books, and I bet the IMF has a plan, I bet the World Bank has a plan, I'm sure special drawing rights or some fancy things, but none of those are proven. We could try them, but in a crisis, to paraphrase Churchill, in a crisis, the solutions you adopt tend to be the ones that are lying around. We only have one on the books that we know about that really works and works well, and that's a gold standard.
Yeah. But do you see, you said hopefully they'll move that way, but do you see any indications that they might move that way?
Well, what's interesting to me is to see the extent to which some central banks are in the accumulation phase for gold again. I never really bought this whole idea that central banks hated gold and thought it was a barbarous relic, because I tend to trust what people do, not what they say. And I noted that central banks still have a whole lot of gold, stuffed in their vaults. They might have moved it around a little bit. Canada lost theirs, but when you look at total central bank holdings and trust that they're reporting accurately, that they haven't leased it out and it exists, you find that they still hold a lot of gold. And central banks have been back on a gold accumulation phase. China was very quietly doing it. They had to do a big restatement of their reserves and said, oh yeah, actually we have 700 more tons than we thought, or some big number like that. And so I'm actually trusting what I'm seeing here, which is that a lot of central banks, and particularly those in the Asian rim, are accumulating gold at this point in time, which I think tells me that there's a chance somebody at that level is looking at this saying gold has a monetary role for the future. It's
got a history. The history, it worked well enough, much better than the present system, therefore maybe reconsider it again in the future.
Absolutely. It's a chance.
It could come from Asia rather than from Europe?
It could come from, somebody's going to do it. Malaysia was trying there for a little while, but I think eventually we'll have to come up with some system that operates in a way that will prevent what's happening from happening again.